right, welcome. You're with us here on Business Today. Let's take a look at all the action that we're tracking for you on the index. Yesterday, a decent close above 26,150. So 175 is where we landed in the pre-open. A marginal downtick coming in today. However, Wall Street overnight was looking good. Tech continues to be on track. And in fact, we'll pull out some of those tech majors for you just to give you a sense of all the action. And take a look at all the gains there as well. Slightly mixed just in Asia. Shanghai Composite down just a notch. But otherwise, pretty much the sentiment is on track. Now, the US has announced plans to scrap the random H-1B lottery and will now pick petitions in a way that favors higher skilled and higher paid foreign workers, marking one of the most consequential overhauls of the program in decades. The Department of Homeland Security, in a statement last night, announced the new framework, which is aimed at protecting American wages and cutting alleged abuse by firms that used multiple low-wage filings to game the old system. For India, which sends the largest cohort of H-1B professionals, this could mean fewer chances for routine, lower-level roles, but better odds for specialized, high-salary profiles. The rule, effective 27th of February next year, will govern the FY27 cap season and is part of President Donald Trump's broader push in his second term to tighten legal immigration while rewarding top talent. Indian IT and outsourcing majors, as well as mid-sized consultancies, will now have to rethink both their wage structures and talent pipelines if they want to stay competitive. Let's, go across to Pranay Padya, who's been tracking the story. Pranay, just take us through some of the latest news coming in. This is, of course, a key story that has been developing and that everyone's closely tracking, given how many people actually take this visa to the US. Take us through the likely implications and really how this was likely to play out.
Aabha, this is a very significant development because, firstly, let me tell you that one of the US court has ruled that President Donald Trump certainly has an authority to go for an overhaul and change in the mandates and the procedure of H-1B visa lottery system. Recently, US State Department and US Department of Homeland Security has also changed the way they screen the H-1B visa system and the some of the other systems, where there will be an exhaustive social media vetting, the profiling of the candidates who will be given H-1B visa and some of the other visas, which are like non-immigrant but for a longer stay. So definitely, President Donald Trump, if you see his campaign and the first year of his presidency, clearly he was all for the change in the H-1B and some of the major, the visa streams of the United States, all immigrant as well as the non-immigrant visas. As far as the H-1B visa, definitely, as you rightly pointed it out, that India is going to get impacted out of this H-1B visa regime change or the systemic changes because we are the biggest beneficiary of it. Because as per the current mechanism, the 65,000 H-1B visas and the 20,000 additional masterclass H-1B visas, like which are for the higher skills. In all these category of like around 85,000 H-1B visas, Indians are the biggest beneficiary of it. So certainly, if there is going to be any change, the Indians or the Indian techies, Indian professionals are going to get impacted out of it. But why US is doing so? That remains a question because, the argument from the Trump administration is that they certainly want better talent, good talent, good global talent, but they do not want H-1B visa system to be used as an easy entry route to the US system. And people, those who come to United States, then they go for they take H-1B visa as a citizenship route. Because they come on H-1B visa, they work on H-1B visas, then they apply for the green card, and then they eventually acquire the US citizenship. But they do not want low key talent. They want high key talent. They want exceptional talent. So they are open for the exceptional talent, but they do not want the mediocre level people as far as the H-1B visas or some of the other EB visas, open visas, and some of the other visa routes which are available. So this is the basic premises that why US is doing these changes as far as the visa regime is concerned. And now, after the court mandate, because the US Chamber of Commerce has appealed in a court that President Donald Trump does not have authority to bring these kind of changes in the H-1B visa regime, and rather it should be mandated by the US Congress. But now the court has ruled, the district judge has said that definitely President Donald Trump has an authority. He has used the Congress mandated authority to bring all these changes. The argument put forth by the U.S. Chamber of Commerce was that it is going to impact the efficiency, the working environment of the U.S. companies as well as the many potential investors. So definitely that is the premises, that is the reason why there should be there should be that should be pulled on hold. But now the U.S. court has mandated. This is definitely a victory for President Donald Trump. But we are yet to see, because the U.S. Chamber of Commerce, who has gone to court, has an option to go for a higher, go for an appeal in higher court, and they have indicated that they are going to exercise this option as well.
All right. Thank you for that, Pranay, and for taking us through all of those details. That's the big breaking news on Trump. Okay, let's take a look at the markets. Now we're just counting down to open. Let's take a look at what some of the key stocks are that we're tracking today. Whole host of brokerage upgrades. Jefferies on Pine Labs, has initiated a buy with 300 rupees per share. Nuvama on Jindal Steel, also a buy call coming in, 1,264 rupees a share. Jefferies has also put in a buy call on Chola Investment, and Goldman Sachs on Physicswala. Let's pull that one up for you as well. Goldman, in fact, initiating a neutral call on Physicswala at a price target of 135. Macquarie has an outperform on Ambuja Cements, and HSBC has a buy call on Ambuja Cements as well. So remember, this is of course post the cement merger. So Macquarie is looking at a 608 and HSBC at a 700 for an Ambuja. Meanwhile, Investec is looking at LG Electronics with a reduce on that one. Remember, it's seen a big spike, of course, post the listing. And Nuvama on Knowledge Marine has initiated a buy at target price of 2,500 on that one, and we'll pull that one up for you as well. All right. Let's also welcome in Sharad Avasthi. Sharad, good morning. How are the markets looking to you? It is holiday season and people are already kind of switching off. But what are we in store for today or for the balance of this year?
I think it should be positive only. The momentum globally as well as in India seems positive. More so in India, I think finally we are seeing some positive momentum. The return of FIIs is something that we still wait. I think if that starts happening, that could be a very big trigger for Indian markets to move up, because that is the one missing piece. And I think this Q1 numbers and the expectations around them should create much higher levels for the market. So I think, broadly, we can expect the markets to be much higher from here. Inflation is benign, rates are lower globally. And I think once FIIs possibly they make a return, then probably that could be a big trigger for the markets to move much higher. Quarterly results are something that we expect to be very positive, and that should drive markets much higher.
All right, so quarterly results really again going to be in focus. So among the earnings, where are you focusing, Sharad? Would you be looking at continued positive commentary from IT? Would you be looking at renewed consumption or better margins from FMCG? Financials, anything expected there at this point of time? Like what really will you be focusing on?
I think one is financials. The RBI relaxation, etc., should play out very well for the whole sector, particularly the NBFC space. I think that should do very well. There are on the ground feelers which say that the CV cycle is most probably returning to be a better place. So I think most of the CV finances, most of the small finance, or most of the NBFCs have a CV finance wing. So I think they should do very well. And generally also we expect advances to grow at a better than expected rate. So that should help. The smaller consumer durable loans should do very well with respect to the consumption boom. So that is one space that we expect to do very well. And I think over the next 6 to 9 months, the other space that could surprise you positively, and that has come down substantially over the last 6 months, is real estate. Most of the real estate commentary is heavy on the second half of the year. So I think this quarter and next quarter, we'll see a lot of execution on that part. So that will result in some re-rating for that space. And it has already corrected also. So I think real estate and BFSI would be two spaces you could focus on over the next 2 quarters.
All right, there you go. That's BFSI for you. We've got a whole host of stocks and news, of course, this morning from the broader markets as well. Looking at some of the tech action, though, in the US, Sharad, anything particular that you're eyeing there, whether it be from mid-cap IT or the frontline names? We saw a lot of action on the ADR, Infi ADR, of course, last couple of weeks, but we've also seen a lot of deal buzz across some of the other IT majors.
Yeah, I think action would be much higher in IT. In the quarterly numbers also, it will be visible because the big deal wins that they have had now, they will start to show up in the numbers. So the policy related, dilemma, etc., as you were rightly talking about the H1 visa issues, H1 visa issues also. I think something or the other keeps cropping up. I think after this recent run up from the lows, we can't say that across the board we are very attractively valued. But I think they would be fairly valued. So, within the IT space, if you want to focus, we are focusing something on an Orient Tech, which is more domestic driven. Scient could be a very good name. I think, again, this is something where we expect the second half to be much better. So we are primarily focusing on these two stories, Scient and Orient Tech.
All right, Scient and Orient Tech. 3 seconds go to market opening. Here you have it. Let's opening ticks on your screen. Just a marginal. Okay, markets are deciding red or green this morning. They look a little uncertain, but just a marginal downtick there, 26,162. Sharad, you had phenomenal, brokerage reports coming in, talking about 28, talking about 30,000, and, how India stands to gain. But given the kind of sort of a steady move that we've seen now almost the whole month, really no action, no major trigger that's the market's reacting to. How do you see things panning out in the New Year's, even with earnings? Is it going to be largely stock specific, or do you really see the index actually moving further from these levels?
No, I think the index will also move from these levels. What we are expecting is that, maybe the fair valuation would be around 29,000, 30,000. That is where maybe you will start looking at things as if they've peaked out or something like that. But right now, I think, yeah, there is scope for that kind of improvement. And the broader picture is the next year, we should start pretty well. How that takes up after that, I think a lot would depend on how the tariff situation pans out. But largely, whatever we are trying to understand, whatever we are understanding from the broader things is that globally it's a bit fragile. The way gold as well as equity has been moving up in tandem, it usually does not play out very well. So that is one challenge that is there. But I think, yeah, broadly we are still, maybe 15-20% upside from current levels. After that, maybe it would be better to take a call. And our view is that most probably in this leg, probably small caps, which have underperformed over the last 6 to 8 months, would outperform large caps and mid caps. Market related returns would be generated from mid caps and large caps, but small caps we think is somewhere the alpha would be generated because the numbers would be much better over the next 6 to 9 months in terms of earnings and top line growth for small caps vis-a-vis large caps and mid caps.
All right, let's take a look at some of the other gainers and losers for you on your screen. Let's just pull up some of the market action and see what else is transpiring this morning. What's reacting to some amount of news. We've got Bell rise with the promoter selling a 6% stake, BlackRock buying a fair amount of shares, and SBI MF buying the rest. We've got a little bit of green across the indices. We've got some amount of movers in the broader markets. Other than that, Hindustan Copper continuing to run up, Ajanta Pharma, JBM Auto, Granules, MQ Pharma as well. Remember, they've also got that approval coming in for a weight loss edible drug. So that's what's moving there. Hindustan Zinc, Deepak Fertilizers, Maharashtra Scooters, RBL Bank, some of the names that are on track for some amount of gains today. Federal Bank from the banking, NMDC also. Rail stocks are also moving. Jupiter Wagon is up about 4%. And remember, we've been tracking rail ahead of the budget, ahead of, freight hikes as well. So rail continues to be in focus there. NBFCs have been in focus this week. We've got Praj also moving. Fertilizers, some amount of action in agri fertilizers, NBFCs, gold finance companies, so on and so forth. From the broader markets. Laurus Labs continuing its up move as well. Vikran Engineering, they've bagged a 20 billion EPC order. So let's pull up Vikran Engineering for you as well and see how it's reacting to that news coming in this morning. Let's just pull that up for you. 14%, looking phenomenal on the back of that news. So clear reaction coming in there. And a couple of the pharma majors are in news. I know we've not been talking too much about pharma, but Aurobindo, a subsidiary, is looking to acquire an additional 20% stake in Lux and Aurovitas. That's about a $5 million deal. Ajanta Pharma, they've entered an in-licensing agreement with Biocon to market semaglutide across 26 countries. So that's what's buzzing there on Ajanta. Canada HSBC Life, I just want to pull that up because we've seen some of those group counters buzzing. They've entered a strategic bank assurance tie-up with Equitas Small Finance Bank. So let's just pull up Canada HSBC Life for you. It's a little lower today, but pull up the weekly. And I'm going to get a check from Sharad on this one as well. Sharad, what are you making on Canada HSBC Life?
Yeah, I think same story across life insurance. We expect, the whole space to do very well. Penetration levels are very low in the country still. And compared to private players, players like LIC, Canada, HSBC, obviously they trade at a discount. So I think long term, yeah, it will depend on the growth. Still not one of the larger players, but the way they grow and type of penetration gap that is there in the country, we should have generic growth triggers for most insurance companies. So long term, yeah, certainly positive across insurance. I think even Canada should benefit out of that.
Okay, that's on Canada. Let me also welcome in Gaurav Sharma of Glow Capital, who's also joining us this morning. Gaurav, good to have you with us. What are you making of the market action? Steady, quiet, a little bleak? What would you call it?
Hi, morning Aabha, morning Sharad, and very warm good morning to all the viewers of Business Today. So yes, a dull start for the morning. I think it is pretty much likely also. People are into the festive mode now. Christmas is just a day ahead now. We are all set for the new year as well. So I think there is this is a kind of a dull move that we are witnessing here, and it is I think every year that is. This time when we see the equities trading dull, nothing too surprising as such. I think still we will have stock specific action coming in. So we are clearly focusing on that space only. We firmly believe that from here on, NBFCs will continue on the growth path. Selected metal stocks will continue. Auto ancillary space is buzzing and will continue their outperformance going into 2026 as well. So we are just trying to hunt down some of the better names from these packs.
Okay, fair enough. I've got to ask you about metals before we go deeper into financials, because that's, I think, the one pocket where we've continued to see traction. Gold at the record now, so Muthoot Manappuram back in focus, of course. But apart from that, on the back of silver, and then we've seen global prices, so Hindustan Zinc, copper, Nalco have been like clear bets all through this season and continue to ride high. And metal index today as well continuing to look strong. Meanwhile, so got to get a take from you on the continued action that we're seeing on the metals pack, Gaurav.
There are mounting pressures and tensions from Venezuela region coming in. This is actually adding to the spur in the gold and silver prices, especially the gold. What we saw in crude oil too, even with the rising inventories, it was the fifth consecutive trading session in a row when crude prices edged higher. So all in all, what we are seeing is a divergence here coming in, that equities are laying low and metals are continuing their growth story. So money is completely, heading towards metals as such. So till the point these uncertainties do not fade out, I think the metal pack will gain that traction. I think as we head towards 2026, things should come back to equities, and that's precisely what we are expecting.
All right. That's interesting. Let me also, when we say, in fact, Gaurav, since you're talking about it, and Sharad and I were discussing this earlier, when we say a move back to equities, are you expecting that foreign fund inflow to come back? Because till now it's It kind of started, but of course we're in holiday season, and then we're also watching the global rate environment and really wondering how this is going to play out. How confident are you of that reversal of trend and inflows picking up in the new year?
I'm pretty much confident here. As we head towards 2026, I think the first quarter will pave way for a lot of new things coming in. Post budget, we would see attractive buying coming in. We remain bullish on the sectors I have already stated for all throughout the year going ahead. We have been suggesting the same to our clients as well. And here is a general disclaimer also. They may have a position in those sectors and stocks. So therefore, getting into 2026, it will certainly be better than what we have seen so far in 2025. Year-to-date returns for this year have not been that encouraging. It is just about closing towards 11 odd percent. We will certainly head towards a better number for 2026.
All right. Sharad, I want to pull up this counter called Knowledge Marine. We've got Nuvama actually coming out with a buy call on this one. I don't know if you've looked at it. The business mix spans dredging, shipbuilding, ancillary services. They've actually put a 2,500 rupee buy or a target price on Knowledge Marine, which is a 40% upside. Have you ever taken a look at this counter? Yeah, even Sharad's raising his eyebrow. So let's just see. Does it pop up on your charts?
I have not looked at this counter for a time, so I would not be able to comment on it.
It's an unusual one then. Anything else in the session opening, Sharad, that's catching your eye from the NBFCs, for example? Would you have any preferred picks from that basket, given the kind of continued, favor that they continue to find with the market?
Yeah, we are looking at some of the MFI kind of stories. So maybe Credit Access Grameen could be a good story to look at. Liability group model actually has better credit underwriting, and it is well diversified also. So even if it trades at 3.5 times, we are looking at targets of somewhere around 1,600 on the stock. Similarly, other microfinance institutions and some of the small finance banks, something like Rujivan could look very well, because we are expecting this MSME microfinance thing to turn around over the next 6 to 9 months. And if that plays out as we are expecting, I think most of these small finance banks or small finance heavy banks, something like an IndusInd also could do very well. Something like an Spandana Spurti, which has been a rank underperformer, could be something that could rank up. So these are places where we think that you have some comfort in terms of valuation. So once things pan out and start improving on the MSME microfinance space, they could substantially ramp up from current levels.
All right, we've got Jeffries also on Pine Labs initiating a buy, and Pine Labs is up today about 6% already, and we've been seeing a whole host of these new listings with brokerage views coming in. So Pine Labs today, we've also had Grow move up, for example, and some of the others too, Lenskart and so forth. They've put a buy call. They're actually seeing EBITDA margins rising, and they're saying valuations offer a re-rating potential. So they're very confident on Pine Labs. I don't know if I should go to Gaurav on this one, because I know most of you don't want to talk about any of the new listings. So I'll hold my breath there. VIP, there's a large trade, almost 4 crore shares. There's 26% equity changing hands, 2 block deals. The stock is up about 5%. So let's pull up VIP for you. Phenomenal move coming in on that counter this morning. There you have it. Okay, so that's a VIP for you. 8% today. Gaurav, any view on VIP?
There is a very, very good up move coming in. Only in the initial 10-15 odd minutes of trade, 8% up. Still, it has a potential 400, 405 can be seen in today's trading session as well. The stock is mounting higher on back of very good amount of volumes coming in. I think it is already 4 times of its regular, usual 30-day average volume. So I think more upside can be seen here, although I am not suggesting taking a buy position here, as the stock has already shot up, so the profit to stop loss ratio will not be favorable at these levels.
Okay, so not too keen, even though the stock is spiraling this morning. Okay, on the back of a few key triggers early next year, Sharad, let's take a look. We've got, I know you said earnings, but we've also got budget coming up. For instance, let's not talk about the trade deal, even though we were anticipating maybe some uptick in agri on the back of the New Zealand agreement. Nothing much happening there so far. But let's talk about budget. In light of that, pockets like rail or infra, hospitality, jewelry always come in focus. Anything that you're going to be eyeing from that point of view?
Yeah, I think the whole manufacturing space should have a lot of information and news coming in terms of taxation changes. Finally, the government is addressing the inverted duty structure, which has been a hangover for quite some time for us. So I think most of the manufacturing companies will have something or the other to cheer about, particularly on the chemical side. There is a lot of complex behavior in terms of, the inverted duty structure. So that is some space you could look at, though we are bullish on the agrochem sector. And regarding infra, I think rail, etc., it's hard to find valuation at current valuation comfort at current levels. But I certainly think the type of ecosystem, like what I'm expecting is the second half, we should have a lot of order awarding. We have already seen part of it reflected in the type of order book accretion. So I think civil infra is something most companies should do very well. Something like an NCC most probably has corrected substantially, that could do very well. So I think, civil infra companies should do very well going ahead, and order awarding activity should be very high, and the budget should also be, good for them. But addressing the inverted duty structure, I think chemicals is something that should substantially benefit out of that. Within chemicals, I think UPL obviously remains our top bet on the agrichem side. But if you are a long-term player, I think something like a Chemplast, Sanmar, etc., could also be very good idea to look at. They have a lot of capex. It's again being one rank underperformer, and companies like Deepak Nitrite, Gujarat Fluoro, I think these are good ideas that we are looking at.
All right, fair enough. Gaurav, from an earnings perspective, and I was discussing this with Sharad earlier, where are you focusing your attention? Would it be on the financials? Because Sharad's saying that that's clearly where he's going to be keeping his eyes focused.
Certainly, we cannot just leave the financial space from our side. PSU banking space remain our favorite. NBFC space remain our favorite. Shriram Finance. I see good amount of results and improvements coming in from the Sundaram Finance space and Manappuram as well. So these are some of the stocks from the NBFC space one can keep an eye at. I'm also very much optimistic on the auto ancillary space as we go into 2026. I think the next 2 to 3 quarters we would see good numbers coming in from the auto part makers. May it be something like a Minda Corporation or Motherson Sumi or the tire makers. Therefore, we are pretty much optimistic on these areas.
All right. Okay, that's an interesting trend because, we've been talking a lot about auto around festive season, and now closer to, of course, the new year, we've seen a slight petering down or slight quieting. They're not actually looking at hiking prices for the first time in January, looking to continue to see the benefit of the GST cut. We've been waiting for the two-wheeler demand to pick up, but Hero, in fact, has seen some amount of downgrades, not downgrades, but I think people saying that, or experts saying that perhaps it's topped out. Aisha has been at records, and it's got an agri play there as well, of course. Tata Motors, we know, hasn't had the best year. We've also seen the demerger. Where would you be looking deeper within the auto pack? And then, of course, we'll, as Gaurav said, of course, there's an auto ancillary play as well. But within the key auto majors, Sharad, where would you be looking?
So within four-wheelers, I think Tata Motors, as you rightly pointed out, the CV part has done very well with post-listing. But there, I don't think that now valuations are very, favorable now. So maybe you can miss it. But I think Tata Motors passenger vehicle is certainly a top bet that you can look at. I think within the four-wheeler space, that will be our top pick. In the two-wheeler space, though, Hero has recently just marginally underperformed. But I think that in terms of valuation comfort, in terms of R&D benefits that are still to come into, and ideally a 7-year cycle of R&D has already gone through. So I think the product launches, etc., should be very, heartening for Hero. So we would like to bet on Hero within the two-wheeler space. I think there is a lot of valuation comfort there, and there's a lot of catch-up that it can play. And regarding the earth moving and tractors, etc., I think escorts is something you can start looking at. The Kubota tie-up and the non-traditional market expansion should play out over the years to come. And if you want to mix something, within the material handling as well as defense partly, I think BEML is something that you can look at. We feel that it's very attractively priced at current levels. 1700, 1800, we are looking at targets of somewhere around 2800. So these are three, four ideas within the material handling, commercial vehicle, and four-wheeler, two-wheeler space that we are looking at.
All right. Interesting. Renewables, energy, that was a very, very huge space or huge theme that played out this year. When we're looking at the new year, again, is this one that we expect to continue to find value or potential in? Are there better pockets of the market to look at? We've discussed metals, financials, how IT has been laggard. What about the renewable segment? Let me come to you first on this, Gaurav.
Yes, this segment witnessed good amount of traction in the past, and it is actually a long-term story. We have to look at from a 3 to 4 or 5 years perspective. Something like when we talk about renewable energy, the manufacturing parts companies indulge in the business like the Wari Energies are getting in good contracts. Wind energy companies, we remain pretty bullish on that. Suzlon remain one of our favorite picks, although it has not performed that much. But I still believe that from a 1.5 to 2 year standpoint, this stock has all potential to outperform. Other stocks which have done a good amount of capex in the past will have and will share their part of kitty in the coming 1 to 2 years. So, renewable energy is something which has to be looked at from at least a 2 years perspective.
Okay, what about you, Sharad? What's your take on this segment?
Yeah, as I think as Gaurav rightly mentioned, that this is something that you need to look at with a long-term view, because most of the expansion that is happening for most of these companies is over the next 1.5 2 years. There is a lot of order book accretion that is happening. Sorry. So Gaurav's covered some of the traditional well-known names. What we are focusing on is a multi-bagger kind of idea within the space. I think Acme Solar is something we are focusing on. We are focusing on much larger targets, but initially you can look at targets of around 330, 340. Considering next year it'll do somewhere around 10, 11 rupees. Should ideally get 30 rupees, because even after that the traction in earnings should be much higher compared to what we see next year. And this is a large capex, 17,000 crore capex, BESS, FDRE, hybrid wind power projects, wind and solar projects, and solar projects being the mainstay. So I think this is one idea we are closely tracking, and we think this could be a multi-bagger kind of idea, 2, 3 times over the next 3.5 years. So this is one idea we're looking at, and generally I'm bullish about this whole space. Even Sterling Wilson Solar should do well, but something or the other keeps popping up there in terms of negative news. So that's been one adverse area, but it has corrected substantially, so that could be something. And even Borosil Renewables could be something you could look at as the international capex really starts playing in.
All right. Okay, fair enough. A few other pockets. Let's talk about pharma. There's all been, some amount of news buzz, deal here, deal there, some approval, etc., US FDA clearance, the usual. But we haven't really necessarily seen any mega moves, but pharma has traditionally always been, a good hedge. Within the pharma pie, anything you like, or the market, there are other pockets, and even in the broader markets, it could be seen as far more exciting. Ajanta today is up about 4% on the back of that licensing agreement. MCure just got approval for a new drug. Biocon is constantly in the news, of course. But what do you feel about pharma as part of the overall pie?
This is for me.
Yes, Sharad.
Yeah, so I think we continue to be bullish, though across the board it might be difficult. I think the frontline names like Cipla, Sun Pharma, they may be fairly valued and give you market-linked returns. But I think valuation comfort is more in case of, Dr. Reddy, we are very comfortable with current valuations. And if the Indian ramp up as well as the biologics, expansion plays out, they should do very well. The valuation comfort is much higher there, though not much earnings growth is expected due to some products going out. So I think that's one idea that we are looking at. Regarding the traditional names, the more favored names like the DVs of the world, I think valuations are a bit stretched. One big capex is happening. How it plays out over time is something we are closely monitoring. So how that plays out, we'll look at it. But I think if I have to bet, I think Biocon and Dr. Reddy would be my preferred choices. I think Biocon, as more and more virus acquisition stabilizes, the debt overhang comes down. That could be one story that could get even further re-rated from current levels. So Biocon and Dr. Reddy on the frontline names. And some of the smaller names, I think Akums Drugs is something we are looking at. We expect a lot of improvement there in terms of capacity utilization improvements, margin improvements. So that is one idea that could do very well over the next 1.5 to 2 years.
All right, there you go. All right, Gaurav, should we just close with some top picks for today then?
Yeah, Aabha. So in today's trade, although I'm not expecting the index to give us a clear way out here, but nevertheless, some stock specific action is likely to be seen. Manappuram is on my radar. With the gold getting back into action now, I think this particular space will attract good amount of buying going forward. Manappuram, from a short-term trading standpoint, currently trading at 304. Stop at 293 can be placed, and targets close to 330 can be expected in this stock in the coming week or so. Other than that, another stock catches my eyes. It is from the tire space only. Apollo tires can be looked upon. I've been stating that we are bullish on the auto ancillary space, the tires. So this is laying low, hasn't performed that much again compared to other tire makers. 508 is the current price. Take a stop at 490 and look for targets close to 540 in this stock. Again, I think in 1 to 2 weeks, it should head towards those target areas. So these are the two stocks which can be looked upon for today.
All right, gentlemen, thank you so much for joining us this morning. Always great chatting with you. Have a very Merry Christmas, and we'll see you again soon. Thanks so much for watching.
Merry Christmas to you as well. Thank you.
Markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest